and issues so that we can be able to prepare the store's ledger card, so that we can be able to establish the closing stock for any particular item within a given period of time. So we can summarize that. This will involve the methods. It will involve the methods which are used to buy and issue materials, in the store. They include number one will be first in, first out method. Number one is the first in, first out method. In brackets, P4. Then we continue by writing that under this method, comma, materials purchased first. Under this method, comma, materials purchased first are the first to be issued out. Under this method, materials purchased first are the first to be issued out. Materials purchased first are the first to be issued out. Therefore, the materials in the store. Materials in the store are the last materials that were purchased. Materials in the store are the last materials that were purchased. Then another paragraph is that to determine the value of the closing stock, comma, the store's ledger card. Is prepared. So let us now get some questions on how to use that method in order to prepare the store's ledger card. Let us now get some questions in relation to that. So the first question I want us to use. So go to November 2020. Question number 1, part A. We go to November 2020. There is a question number 1, part A. November 2020. There is a question number 1, part A. November 2020. Question 1, part A. You can see the question for Minjiwa Limited. Mine is on page 24. So Minjiwa Limited is a manufacturing firm operating in the textile industry. The company recorded the following transactions in relation to product BT during the month of January 2020. during the month of January 2020. So they gave you the date from 1st of January to 31st. They gave you purchases. They also gave you the sales. So additional information, note number 1. The opening inventory or product bidding on 1st of January 2020, it comprised of 9,500 units purchased at a cost of Shillings 135 per unit. Note number 2, on 9th of January 2020, the company reported a shortage of 300 units. Note number 3, on 19th of January 2020, 600 units of the units sold on 17th of January 2020 were returned by the customer. So required the store's ledger account for the month of January 2020 using the first in, first out method of the inventory valuation method. Then also value of the closing stock. Then we shall also add there raw material 3. Raw material 3 will be income statement or trading profit and loss account. We shall also include there the income statement or the trading profit and loss account or the trading profit and loss account. So we shall first come up with the store's ledger card. So this is now the store's ledger card. Store's ledger card. The store's ledger card using FIFO method. Using the FIFO method. The store's ledger card using the FIFO method. So now you want to see how to prepare our store's ledger card when we are using the FIFO method. So the first thing will be the date. We shall first have the date. We shall first have the date. Then there will be purchases. There will be purchases. Then there will be the sales. Then after the sales, there will also be the balance like that. There will also be the balance from that portion. There will also be the balance from that level. So units, the cost per unit. Also the value. Also the units. Units, cost per unit, but also the value. Units, cost per unit, and also the value. So we want now to prepare the store's ledger card using the first in, first out method. So you have the column for the debt, then purchases, sales, and also the balance. The sales and also the balance. So we start off with the opening stock or opening balance. Opening balance, check in the note number 1. When you go to the note number 1, they have said that opening inventory of the product. Opening inventory of the product DB on 1st of January 2020. It comprised of 9,500 units, which were purchased at a cost of 135. So we start now with that particular date. On 1st of January, there was opening balance. There was opening balance. Opening balance is taken direct into the balances. Opening balance is taken directly into the balances. And we have said that balance is 9,500 units. 9,500 units. Then the price per unit is 135. The price per unit is 135. So when you multiply 135 by that figure of 9,500, what should be the value for that? 12. 8 to 500 letters. Yeah, so that is now the opening balance. That is now the opening balance. Then still on first. Still on first, there were purchases. Still on first, there were also purchases. So purchases, they will be recorded in that. Then they were purchased at 150 per unit. So also take 12,000 multiplied by 150. 1.8 million. So you also record it among the balances. Apart from being a purchase, you also take it to the store. So that by that date, you have those transactions. So now we close that date. So that date is closed like this. We now close that particular date. So after that, we go to the next date of the transactions. We go to the next date of the transactions. So what is the next date of the transactions? Are you able to see on 3rd? What happened on 3rd? There were also purchases. Are you able to see that? Yeah, there were also purchases. They were able to buy 8,000 units, valued at 160. So 8,000 multiplied by 160 should give you around which? It's 1280. Then, when it now comes to the balance, it has 3 balances as per that date. Start with what was there initially at 135, 28. There is also the 12,000 at 1.8. Now, there is also 8,000 at 160. So total amount is 1.28. So we also close that date. You also close that particular date. Also close that particular date. So you confirm again the next date of the transaction. Confirm again the next date of the transaction is supposed to be when? Now on 7th. So the next date should be on 7th. So on the 7th, they were able to do it, to sell. On the 7th, they were able to sell. We are following the order of first in, first out. So they were supposed to sell 12,000. They were supposed to sell 12,000, but we have how many balances in the store? There are 3. You start by selling the first one. So the first one is the 9,500. It is not sufficient to make it 12. Then also remember, when you are selling, doesn't mean that I record here the selling price. I will issue material at cost. So that selling price that you are given is only applicable when you prepare the income statement. But in the store's ledger card, materials are valued at cost. Materials are valued at cost. So don't include the selling price in the store's ledger card. This one is simply telling me material have gone out, but I don't know where it went because I'm just in the store. So when you sell or when they issue, we start by issuing the 9,500. You issue them at cost. We issue them at cost, even though they have given you a selling price, but that selling price is supposed to be used when you prepare the trading profit and loss account. So there are 12. Then we have issued 9,500. So what is the remaining balance from the 12? It is 2,500. So the 2,500 will come from this 12. Because there are 3 balances. First in, first out. We have first of all sold the 9,500, but the total is supposed to be 12. So the remaining 2,000 must now come from where? The 12,000. So you value them at 150. We value them at 150. We value them at 150. We value them at 150, which is supposed to be which figure? Sorry? So in the balances, remember, this one is fully issued. This first one is fully issued. This second one, you have issued 2,500. So what is the remaining balance? 9,500. So this 9,500 is coming from the 12. Because from the 12, we issued 2,500. So you value them at 150. We value them at 150. We value them at 150. We value them at 150, which is supposed to give us each here. 14. Then now there is also 8,000 at 160, which is meant to be 1280. So we also close that transaction. So we got the next date of the transaction. We got the next date of the transaction. So our next date should be when? Date 8. You can see date 8. So what happens on date 8? They are purchasing. They were able to buy 10,000 units, which were valued at 155. So 10,000 multiplied by 155, it is supposed to give us how much? So when it comes to the balances, now you have three balances. The first one is 9,500 at 150, which had given you 14.5. There is also 8,000 at 160. Now there is 10,000. There is 10,000 at 155. And that figure. So you also close that transaction. We now also close off that particular transaction. We go to the next debt. Our next debt is supposed to be when? In the note number 2. Are you able to see the note number 2? In the additional information, what is there in the note number 2? On 9th of January 2020, the company reported what? A shortage. So a shortage would reduce the balance. A shortage will reduce the balance. Anything that reduces the balances, you record it in the column of the sales. Sales are the same as issues. So when they get spoiled, you issue them out from the stock. You issue them out from the stock. So we shall now go to date 9. So there was a shortage. Shortage are the units that are spoiled. So you remove them from the stock. But we follow the order. We follow the order. Remember, there are 300 units. They are 300 units. So that shortage should occur from what you received first, because you are following first in, first out. So it will be valid at 150. Valid it at 150 because you are following the order first in, first out. Even the shortage, it occurred from the first balance that you received. So when you value them at 150, they should give you how much? At 5,000. 45,000. So when it comes to the balances, each shortage may go up for 9,500, which means you are now left with what? 9,200 at 150, which is supposed to give you 1425. Sorry, multiply. 138. That is 1380. Then now you include 8,000. You now include 8,000 at 160, which is supposed to be 12. Then now you also have 10,000 at 135. So we close that transaction. Close off that particular transaction. So we go to the next debt. The next debt is supposed to be when? On 30. The next debt should be on 30. So what happened on 13? They are meant to sell, isn't it? They are selling how many units? Yeah, so the 5,000 should be valued at 150 because first in, first out. You value them at 150. So it should give you how much? 5,000 by 150. 75,000. It is exactly 75,000. Then, sorry, I'll get another 7. So The next, so when you minus 5,000 from the 9,200, you are left with what? 42. So the 42 are valued at 150. So that one should give us which figure? 600 and 630. Then the others, there is also 8,000. So the 8,000 at 160. 8,000 at 160, which is meant to be 128. There is also the 10,000. 10,000 is at 155. So that is now as per that date. That is now as per that date. So we need now to go to the next date. So mine is a continuation, yours is a continuation, but may I will grab this part. So what is the next date? So what happens on the 17th? They are also selling. Are they selling? Yeah, so we go to date 17. Remember they are selling how many? They are selling 8,000. But our first balance is only 4,000. So you start by selling 4,200, isn't it? Yeah, so the first one to sell will be 4,200 at 150, which is how much? 630. So how many are remaining to make it 8? So that 800 should now come from the 8,000. And it is valued at which figure? 160. So we multiply by 160, which will give us how much? 648. 608. 8,000 like that. So when it comes to the balance, the 4,200 has been fully sold. The 8,000 they have sold 38. So 142, isn't it? So it is still 42, but now at 100 and what? At 160. At 160, which is supposed to give you which value? You also have the 10,000. Also have the 10,000 at 150. We go to the next date. Next date, you go to the additional information. Are you able to see the note number 3? What is there in the note number 3? On 19th of January 2020, 600 units sold on 17 January were returned by the what? So when they return, they increase their balance. So you record them like annual purchase. We treat them as annual purchase. So we go to date 19. So they have said they returned how many units? But they had been sold on which date? So 17th, so we are following the order. First in, first out. So at a return from the 4,200, because first in, first out. The first one to be returned should be the first that was sold, isn't it? There are two of them. Kuna 150 and 160. So the 600 must be coming in from the 4,200. So we value them at 150. We value them at 150. Which should be able to give us around which day? 90,000. So the balances, there are three of them. You start with the 42, then 160, then now the 10. Now the 600, the latest balance in the stock. We go to the next date of the transaction. The next date should be when? On 20th, isn't it? So what happened on 20th? There were also purchases. 20th, they were able to buy 12,000 units. So they were purchased at 140. So 12,000 multiplied by 140 should give us which value? Now the balances, there are four. Balances, there are four. There is 42, 160. The next date should be when? So what happened on 23rd? On 23rd, there were also purchases. They were buying how many units? 7,000 at 152 points. So that should give us how much? Seven 16. So balances are now 5 of them. The balances, they are now 5 of them. So we go to the next date. So what is our next date? On 20 what? 25th. So what happens on 25th? We sell. But we are supposed to sell 11. But the first one is only 4,200. So what is the balance to make it 11? $6,800. So this one comes from the 10. So it is valued at 1. Which is supposed to be how much? So in the balances, we have issued 6,800 from the 10,000. We are left with 30 what? So 32 is valued at 155. No, I'm going to 56. 68. 68. Then, yeah. Let me find out and say what is the 5,800? So it was 11,000. Then we can subtract 4,200. Nabaki ngapi? Nabaki 68. I'm at 58. So hii tunasema ngapi? That's 201 by 155. And sasa kuna 600. At 12. So when is our next date? 27 on root of 10 hours. So on 27. So we start off by selling attitude at 155, which is supposed to be 490. There's also 600. So, sinabaki ngapi zifike 10? $6,200. So $6,200 will come from the 12,000, valued at 140. So what should be that balance? What should be that amount? Correct? 868,000. So balances, when you minus 6,200 from the 12,000, you are left with what? So 58 at 140, which is supposed to be 820. 812. There is also the 7,000. Which is supposed to be how much? So what is the next bit of the transaction? So what happened on party costs? They were able to sell 400. So the 200 should come from the 5,800. So you value it at 100, which is supposed to be 48,000. So balances, you need about 56. 56 and 140, which is supposed to be which part? 784,000. Then this other one is still there. So that is now your Roman letter 1 of the question, where you are to prepare the stores later using. So we go to the Roman letter 2, which is meant to be valuation or value of the closing stock. So let us now have valuation of the closing stock. We now want to get the value of the closing stock. So when it comes to valuation of the closing stock, it comes to valuation of the closing stock. It will be implicit. Multiplied by 140. It will be equal to 7. And kuna hiyo ya 7, you take the balances, the last one. Na 7,000 at 152.5, which has given us 1067. So get the total for the units and also the total for the van. So you get the total for the units and also the total for the van. The total of the units and also the total of the van. So I said we were to add there the trading profit and loss account, even though the question did not ask. So let us now prepare the trading profit and loss account. We need to get the sales. So now it is where that selling price will come in. It's now the point where the selling price will now have to come in. It is now at that point where the selling price will have to come in. So start by getting the sales revenue. Start by getting the sales revenue. So to get the sales revenue, get your sales revenue. You remember the units for the sales. The first one is 12,000. The selling price is 200. You earn. The second one is 5,000 multiplied by 210. The next one is 8,000 multiplied by what? 205. The next one is 11,000. It is 11,000 multiplied by 11,000 multiplied by 200. We also add the next one is 10,000. This one you multiply 202.5. The last one is 400 multiplied by 212. So that should give you the sales. That should give you the sales revenue. You will also calculate purchases. You will also compute the purchases. When it comes to the purchases, you do the same. It is 12,000 multiplied by 150. Then there is 8,000 multiplied by 160. There is 10,000 multiplied by 1. There is also 12,000 multiplied by 140. Also, 7 multiplied by 152. So as you finish the material, we shall go to the labor. So I've given you the notes for labor. So online, there were some notes that were sent to the class group. The introduction to management accounting, then labor cost. Make sure you get those notes, you go through them. They are for the theory part. You may not find time to go through all the theories, so you read those handouts. So once we have done that, we now prepare the income statement. Once we have done that, we now prepare the income statement. Once we have done that, we now prepare the income statement. So in the income statement, we normally start off with the sales revenue. We start off with the sales revenue. So how much are you getting as the value for the sales revenue? Seven. What on the part are you? Are we all getting that figure? They are both on the same. So we use that one. Then now we less the cost of sales. Zero returns the traditional money. Somewhere there were the returns. They were returned by the customers. Yeah, we normally less returns inwards. So we less returns inwards. They returned how many units? 6. But they have been sold on which date? What is the selling price per unit for the second? Go to the 17, find out the selling price in the question paper. Sorry, the question was watching that. Yeah, they are reducing these sales. And with these sales, you got them by using the selling price. So even these ones, you value them at the selling price. You value them at the selling price. 123,000. So that you get the net sales. So that you get the net sales. So to get the net sales. So our net sales will be which field? 9 through 30 for 400. Yeah, now we less the cost of sales. We less cost of sales. We minus the cost of sales. So under the cost of sales, we normally start with the opening stock. We normally start with opening stock. Opening stock was there in the note number 1. Opening stock was there in the note number 1. Remember, it was the 9,500 valued at 135. It is supposed to be 7. Now you add purchases. You add that figure purchases. Purchases you are going to do there. 73, 77. Then you less the closing stock. Remember the closing stock, valuation of the closing stock. You have to define a Roman letter. Sorry? 1851,500. So that we now get the cost of sales. So what should be our cost of sales? Six. 808. 68. Then, so when you subtract, you get the gross profit. You get the gross profit. So your gross profit in a ngapi? 24.25. The 900. Then you less expenses, but the expenses for this portion is only the shortage. So now Rwanda less expenses. So if there is any expenses, you can do that. But for this question, I'm only having the shortage. So the shortage, go to the store's ledger card, you check when was the shortage. When was the shortage? On line, go to your ledger card. You see the one we did under the store's ledger card. On that date 9, there were how many units? There were 300. You had valued them at how much? 150. So it gave you which figure? 45,000. Yeah. So if there is any other expenses, we could have subtracted it, but it was not there. So that you get now the net profit. So that's now you get it. Thanks. So that part was not there in that question, but most of the time they know us. So if they ask you to prepare the income statement, that is now how you go about it. So let us now have advantages of the first in, first out method. We can now go to the advantages of the first in, first out. Now go to the advantages. The advantages. So when it comes to the advantages, number one is that it is based on the realistic assumption. It is based on the realistic assumption that materials received first, that materials received first are the first to be issued out. Materials received first are the first to be issued out. So that's the first advantage. That method is realistic. Number two is that Materials are issued at the actual cost. Materials are issued at the actual cost. Materials are issued at the actual cost. And therefore, there will be no unrealized profit or loss. And therefore, there will be no unrealized profit or loss. Unrealized profit or loss. Unrealized profit or loss, which will arise from the operation of this method, which will arise from the operation of this method, which will arise from the operation of this method. Number 3 is that the method is easy and simple to understand. The method is easy, so it is easy to understand. It is easy to understand and simple to operate. It is easy to understand and simple to operate. Then the last one is that number 4. The valuation of the closing stock is at cost. The valuation of the closing stock is at cost. The valuation of the closing stock is at cost. And therefore, it will reflect, the actual cost. It will reflect the actual cost that was incurred on the materials. Therefore, it will reflect the actual cost that was incurred on the materials. It will reflect the actual cost that was incurred on materials. We can now have disadvantages for first in, first out. We can also have disadvantages of the first in, first out. So among the disadvantages, number 1 is that this method is based on the assumption that first in, first out. First in, first out. And therefore, when prices are subject to frequent changes, comma, it will involve complicated adjustments. It will involve complicated adjustments to reflect the current costs. Complicated adjustments to reflect the current costs. Then number 2 is that materials are issued to the production. Materials are issued to the production at the previous costs. Materials are issued to the production at the previous costs. Materials are issued to the production at the previous costs. And therefore, the cost of production, may not reflect, the current economic factors, affecting the operations, may not reflect the current economic factors affecting the operations. So that is now about first in, first out. We go to the method number 2 as last in, first out. We go to the method number 2 as last in, first out. Last in, first out. We go to the method number 2 as the last in, first out, or simply in brackets, LIFO method. in brackets, we have it as the LIFO method. So for that, we can summarize that this method is based on the assumption that materials which were received last. It is based on the assumption that materials which were received last, are the first ones to be issued out. Therefore, materials in the store are the first materials which were acquired. Materials in the store are the first materials which were acquired. So I'll first of all also give you advantages and disadvantages first. But first of all, give you advantages and disadvantages. So we start with advantages of the last in, first out. We start off with advantages of the last in, first out. Advantages of the last in, first out. Number one is that materials are issued to the production. Materials are issued to the production at the latest price paid. Materials are issued to the production at the latest price paid. And therefore, it will take into consideration. The current economic factors. It will take into consideration the current economic factors affecting the production. It will take into consideration the current economic factors affecting the production. Number two is that it does not lead into unrealized profit or loss. It does not lead into unrealized profit or loss. Since materials are issued at the actual cost. In which they were acquired. They are issued at the actual cost in which they were acquired. Number three is that the method is simple and easy to operate. You can also have disadvantages of the last in, first out. You can also have disadvantages for that. So among the disadvantages, number one is that the method is not realistic. As it does not follow the physical flow of the materials. It is not realistic as it does not follow the physical flow of the materials. Then number two is that the closing stock is valued at the previous price. And it does not present the current economic value. it does not present the current economic value, of the stock in the market. Does not present the current economic value of the stock in the market. And finally, number 3 is that the method is cumbersome. The method is cumbersome when prices are subject to frequent changes. The method is cumbersome when prices are subject to frequent changes. When prices are subject to frequent changes. So let us now get one question from the past papers. So the question I want us to use, I want you to check in the sitting of November 2015. November 2015, question number 3, part B. 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 November 2015, mine's on page 66. November 2015, question number 3, part B. Question 3, part B. So that question reads that Ken Stores provided the following information in respect to their operations for the month of July 2015. So they gave you receipts. So receipts are the same as purchases. Issues are the same as sales. So they gave you from the 30th July up to 31st July. Additional information, not number 1. Materials in the store as at 30th June 2015. There were 2,000 units at 50. Not number 2, on 9th of July 2015, part of materials issued on 5th of July 2015, amounting to 200 units were returned. Not number 2, on 15th of July 2015, 100 units were returned to Ken Stores. Not number 4, on 21st July 2015, there was material wastage of 500 units. Then, kuna hiyo not number 5, returns from a June 2015 issue of 100 units at 45 was received on 25th July 2015. Then not number 6, on 28th July 2015, there was a shortage of stock of 20 units. Then not number 7, Ken Store will use first in, first out. But me, I'm using last in, first out, because I don't have that question, a question of the last in, first out. So when we shall be doing the question, we are using which method? Last in, first out, to know how it operates. Then now required. They wanted you to prepare the store's ledger card for Ken Stores for the month of July 2015. So that's the question, but I cannot be able to finish that question directly now. We are left with around Is it 7 minutes? Yeah, so I will not start it when we meet now in our next class, because once we start it, we must complete it so that we don't get lost anywhere. So we shall carry it forward. So I will stop there so that when we meet now in our next class, we should. So now there are some notes, make sure that you go through them so that when we meet now in the next class, we must be able to finish that question and also the other method so that we can go to the labor. So I've given you the notes for the labor costing. Remember to have them in our next class because we are likely to finish. Then we go to the labor. So we can stop there for now. We can stop there for now.